here's the big question. You're interested in value investing and valuing and evaluating businesses on a deep level, but you don't know how, even after researching for hours, probably dozens of hours, hundreds of hours on the internet, and because nobody else shows you how to do it. This podcast has all those answers and much more about value investing in finance. My name is Jason Rivera. Welcome to Value Investing in Your Car. Hey, Jason here. In this episode of Value Investing in Your Car, we're going to continue talking about something I mentioned in the last episode. I believe it was episode 34, where I talked a little bit about how I've been learning a ton in terms of marketing, sales, so I can help people in this arena avoid, not only help people more, but also help people avoid scam artists in this arena, because there's a lot. And I give a specific example, real world example of a family friend of ours who was asking me some advice on retirement advice, and she just got some horrible advice. I mentioned a little bit about why I'm learning so much about marketing and sales in that video, or in that podcast if you're listening on the podcast. Today I want to elaborate on those rules I mentioned really quick in the last video of if you're considering investing with some kind of retirement advisor or CFP or RIA or any kind of investment manager of any kind. I have a pretty standard set of rules you should ask them to figure out real quick, that will help you figure out real quick if they're going to do what's best for you, what's best for them, if they know what they're doing, if they don't know what they're doing, and all these kind of things. So before we get to that, though, I want to make sure that you know that this podcast, if you're listening to this as a podcast, it's now available on all Android and all Apple platforms. It's on iTunes. This podcast is now on iTunes. It's available on Stitcher, Spotify, SoundCloud, Anchor, Podcast Go if you're on Android, which is the podcast app I use to listen to podcasts. It should be available on pretty much all major platforms now. So before, if you were listening to this podcast, it wasn't on Apple yet. We just got a notification a couple days ago that this podcast is now on Apple platforms as well. So it's all should be up on all major podcasting platforms. You can listen to this podcast anywhere you want now on any kind of platform. So having said that, let's get back to what we were talking about. So when it comes to dealing with your real world money, you need to talk with people who are going to have your best interests at heart. Most people in this, I would say, probably in my experience, and this is personal experience, I don't have any statistical data to back this up, but this is my personal experience. Most people in this arena are looking to just get your money because that's how they will make more money. They want your money or your capital because that makes them more money. They don't, most of the time, they try to do a good job for you, but they don't necessarily have your best interest at heart. So before we get to my rules, let me tell you the difference between the two kind of major investment advisors, I guess. That in terms of their certifications, there's two different kind of blocks. Certified financial planners, or CFPs, they do not have a fiduciary responsibility by law to do what is in your best interest. What does that mean? Essentially, they can do what they feel is best for you, and they don't have to do they actually don't have to do that. They don't have to do what's in your best interest. I'll just leave it pretty much at that. It's pretty much as straightforward as it's going to get. CFPs do not have a legal responsibility to do what is in your best interest. The other category is registered investment advisors, or RIAs. They have a legal fiduciary responsibility to do what is in your best interest, meaning they can't do something that goes against what they kind of, I guess, is legally described as your best interest. Again, there's gray area here on what is deemed your best interest or not. But they have to legally do what is in your best interest, or they can get fined. They can lose their certifications. They can be disbarred from, I don't think it's practicing like a lawyer, but not allowed to take on new clients, all those kind of things. So those are kind of the first two things. I'll tell you personally what I technically am. By the kind of legal standards, I am considered a registered investment advisor, except I don't have the certification or the designation of RIA because I just haven't done it. I don't really need to do it the way my company is structured. I don't have to have the certification or the any series licenses the way I structure my company. But that, if I was going to go into that arena, I would go the RIA route, just because I already feel like I have to do what's in client's best interest. So legally, it makes the most sense for me to do what is in their best interest, because that's personally how I always treat clients anyways. So I don't have anything against CFPs most of the time. I do if they're blatantly trying to rip people off, like what happened to my parents. I've told the story of what happened to my parents, I think, in the last video too, where he was literally charging them a 6% fee on top. He wasn't even picking their stocks or their investment funds. He was just essentially a salesperson. He was taking a 6% fee off top. Then he had them in mutual funds that were charging them 2% fees. Then you have to consider taxes and inflation, which is about another 2%. So just to make 1% on their money, because they were getting charged 10 percentage points a year in fees no matter what, just to do 1% profit, they had to do 11% returns, which is insane. Most people don't even do 8% returns on average consistently over years. So that's why they were losing money, and again, I became furious, and that's why I took over the retirement funds. Again, I've told this story multiple times before, and I'll tell it again at some point, but if you want to listen to it, go back and listen to some of the prior episodes, and you'll hear more about that. But, so I don't necessarily have anything wrong against CFPs as kind of a designation or kind of a profession, unless they're doing stuff like that. That stuff just drives me up the wall. It literally drives me insane, because he legally could have, that person who was managing my parents' retirement fund could have put them in funds that were literally, I think it was 0.1 or 0.2% fees, and he had them in 2 percentage point fees in funds that were doing 2 percentage point fees. They were pretty much exactly the same, the funds, except the fees were so much higher with one because they had a relationship with that company. That's why I found out that they were doing that. So, but to kind of get back to my original point, these are the two designations, the two main designations in the retirement kind of advisor arena: RIAs or CFPs. So what are my rules when you're talking to anybody about your investment funds, whether they're an RIA, whether a CFP, or whether somebody like me who runs a company who takes, or who does take on investors at certain points and certain situations? You should ask, and these, again, simplicity. If you follow any of my stuff for any length of time, you know I believe in massive simplicity, simplifying things as much as you possibly can. For question number one, what is your process? If they can't explain this to you in easy to understand terms, you need to run away from them. What is my process, for example? I'm a deep value investor. What does that mean? Deep value investors invest in undervalued assets, and we try to generate higher returns with the maximum amount of safety. That's pretty much it. It's pretty easy to understand, correct? If they get into these convoluted terminologies and using big words that you don't even understand and all this kind of other crap that you don't understand, they either don't know what they're doing, they're trying to confuse you, or they're trying to sound smart, or it's pretty much one of those three options. And you need to run away from them. Question number two, what are your rules, or what are your returns? Pretty simple. If they can't tell you their returns, it's because they're hiding something, because they aren't very good, or maybe they don't know that. Maybe the person you're talking with is a salesperson like my parents were talking with. Maybe they don't have returns because they're just a salesperson. Rule number three, if they can't answer your questions in easy to understand terms, you need to run away from them. Terms you can easily understand. Another thing that got my parents into trouble is they know nothing about finance or investment. Most people in this arena know nothing about finance or investment. That's why they go to a retirement or a person to help them with their retirement funds, because they don't either know what they're doing in this arena, or they don't have the time, or they don't care to have the time to learn this stuff. That's why I always tell people to come to people like me you can trust, or put your money in an index fund, one of the two, if you don't know what you're doing in this arena, because people in this arena will use convoluted terms to try to confuse you. They will use convoluted terms to try to impress you with their massive brains or massive vocabulary or whatever. They will use convoluted terms because they don't know what they're doing. Again, if and I wasn't in the room with them when they talked to this financial advisor, so I can't give you a specific example of what they were talking about, but multiple people I've talked to, pretty much everybody I've talked to, who have talked to another financial advisor and then they've talked with me, said they came out of the meeting with the financial advisor not knowing what the hell they were talking about. They literally had no idea what they were talking about, or how they were going to invest their money. And this made it impossible for them to tell if they were going to have if the financial advisors were going to have their clients' best interests at heart. They literally, this family friend I mentioned in the last video last week said they had like a 3.5, 4 hour long meeting, and they literally were checking their watches about an hour and a half into the meeting because they didn't know what the hell the guy was talking about. Because no, they just didn't know what he was talking about because he was so confusing on what he was trying to say and trying to figure out. And he obviously, in my opinion, again, I've never met him. If you watch the last video, never met him, never seen him, but just by what she was telling me, doesn't know what he's doing, or at the very least doesn't have their best interests at heart. So those are my three main rules on if you're dealing with any kind of financial advisor, investment advisor, or whatever, that you can ask that will immediately tell you or help you determine whether this person has your best interests at heart, knows what they're doing, and is trustworthy. If they fail any of these three, you need to run away from them. It's pretty much just frank as that. If they can't answer these questions in simple, easy to understand terms for you, you need to run away from them. Getting back to question number 2, what are your returns? Most people, what they do with the financials or advisor will do is they'll talk about, we have a mixture of fees and we can't really tell you the exact fee until the actual kind of year happens, or whatever their kind of term is, happens. If they say something like that, well, what is your kind of range? Ask them what the range is. That's a follow-up question you can ask in that terms. For example, I can tell you my returns. 27% on average, not compounded, over the last 6 years, which beats Warren Buffett in the first 6 years of his career. That's my returns in the first 6 years of my career. Does that mean I'm promising these in the future? No. Does it mean I expect these to continue to be this large in the future? No. Do I expect to continue to beat the market and do everything in my power I can to beat the market and produce as high returns as I possibly can for my investors in a safe manner? Yes. Which brings to mind another question 4, that you can ask. Do you guarantee a specific return? If they guarantee a specific return, run. Get out of the office as fast as you can. I never guarantee another person's results in any aspect of my businesses. None. In my courses and coaching programs, I don't guarantee they're going to become world-class value investors. What I guarantee is that if they continue to work hard, continue to develop, continue to learn, that they will be far ahead of other value investors and even regular professional investors, faster than they would be going by themselves. In my kind of investment business, I guarantee no returns. I guarantee that I will do everything in my power to continue to beat the market, continue to beat Buffett, and produce as high returns as I possibly can safely, but that will likely mean down years at some point. That will likely mean lower returns at some point. I do not guarantee 5, 10, 20, 15, 20% returns. I do not. If somebody guarantees their returns to you, run away from them. They are trying to rip you off. I can guarantee, that's one thing I can guarantee out of this whole thing, is if they guarantee returns to you, they're most likely ripping you off, unless there's some kind of caveats when it comes to real estate investing, because real estate investing is more stable. But even then, if they guarantee returns, that's still scary, in my opinion. But those are my main 4 rules to ask any, and a couple follow-ups. You can ask any financial advisor, an investment advisor, anybody you're talking with about your retirement funds, that will help you figure out if they're going to have your best interests at heart, if they're going to be trustworthy, if they know what they're doing, these kind of things. And again, like I talked about in last week's video, in this series, there are a ton of scam artists in this arena. These rules and questions will help you avoid many of them. I hope this video has helped. I hope this video brings you an enormous amount of value. I get these kind of questions all the time about retirement funds and what questions should I ask this person? What should I kind of look out for? I don't know what this person is talking about. What does this mean? All this kind of stuff. So I hope this helps. I hope this brought you a ton of value in your real life, and because I mean, this is real world money. In most cases, this is your retirement fund, this is your nest egg, whatever you want to call it. So, and there are a lot of scam artists in this arena. And if you ever, again, I mentioned this in the last video, why I can tell the other person did not have my family friend's best interests at heart is because they said buy when the market is high. Insane advice. If you hear somebody say that, run away from them too. So I hope these kind of rules, tips, questions help you a lot. If you like this series, make sure to, if you're watching or listening on the podcast, make sure to subscribe and share with your friends who you think will enjoy this. If you're watching on the blog, I'd love to hear your comments on this below in the blog or on YouTube. I'm very active in the comment section on both the blog and on YouTube. I answer all the questions myself personally. Make sure to check out our other series, our case study series, our free training behind the scenes series, our basic financial education, my thoughts series, and all these other series we have. We have a ton of educational content on here for free for you. If you're watching on YouTube, make sure to like, share, and subscribe, and hit the bell so you're notified anytime we release a new video. As of this recording, we are up north of 400 videos, including our not publicly released client training, $10,000 client training session videos and masterclass training session videos. We're up north of 400 videos at this point, and we're releasing new videos every day, or almost every day. So make sure to subscribe and hit the bell. Thanks for watching. I appreciate it. Have a great day. Talk to you soon. Bye.